semis, banks with a second good day, yields, VIX below 14. Is the rotation happening?
I think the rotation is happening. I also think the earnings season is not nearly going to be as disastrous, I think, as the street and some analysts have made a lot of people expect. Look, it's already started. The bank numbers yesterday and again today performed much better than expected. Nobody's talking about disaster. In fact, some of them are even giving much more positive guidance. Johnson & Johnson, UNH, along with some of the banks. And so, therefore, I actually feel good about it, but I think there is a rotation, which is kind of normal based on everything else that's going along, Democratic debates and who's attacking healthcare and who's attacking technology and all that stuff. So there'll be rotation, but it's all part of the process.
You still think we're range-bound, though, here?
I think we're range-bound. I think on the lower end, we're going to test the lows earlier. I don't know, was it last month or was it 27.58 earlier this month? 27.58 is also the 200-day moving average. We came, not 27, excuse me, 28.50. 28.58
sure, yeah.
Was the 200-day moving average. I wouldn't be surprised if over the course of the earnings cycle that we see the market kind of test lower there. Not break it, but just test lower. And I think as we move into the end of the year, then the market rallies back to the highs just around 3,000 is where I think we're going to end up being.
S&P just went positive a few minutes ago. We'll see where it goes from there. But, Joel, a lot of turbulence in tech, particularly software. And last week or so, there was a call from Morgan Stanley about IT spending. They got some people concerned. Then Goldman Sachs on hardware. And then we got Workday, which is software, which is cloud. I thought that was supposed to be safe. What's going on?
Yeah, I mean, Carl mentioned, right, XLK highs of the year leading the market, but there's a lot of moving parts under the hood. And tech, it's been a rough year for many, to say the least. Guys have seen performance erode really since August kind of came around. And you can say death by prospectus. Really, when that WeWork S1 was printed, anything with a lofty valuation and growth had just been carried out to the woodshed. Then they had Cisco issue that warning in mid-August. And then it's kind of been the cloud beats are getting smaller and smaller.
Adobe downgrade today.
Adobe, Citigroup came out with them, the Morgan Stanley CIO survey call. And clearly, whether it's, valuations being compressed in the private side, poor IPO performance, just negative macro impact. Hence, the semis continue to benefit from the cyclical rotation. And, they're maybe not that well owned by the hedge fund community. Guys may be scarce to chase them. Hence, it feels like it's going to be a death grind higher in the chips, and no one wants to touch these software names.
Despite inventories, all-time highs, pretty much.
Exactly. Yeah. But things with the semis, at least you have the semi equipments. They're benefiting from China becoming more silicon independent, EU, 5G acceleration. So there's some good stories. But again, there's a lot of debates and moving parts under the hood.
So, Kenny, you talk about earnings not being as bad as feared. I worry about guidance, and some of the guidance has been good, but tech guidance in particular, when we're getting these projections out into 2020 being in the first half, not so great for semis, IT spending looking to slow down. What do you expect to hear on that, and how's that going to affect the market?
So listen, that's a sector of the broader market, right? The broader S&P.
Arguably, it brought us here, though.
It did bring us here, and what I said, I think there's this rotation going on, and so if you start to see, as we're starting to see, some maybe pullback or modification of the earnings, I'm not going to be really surprised. I still think tech has got a place in the portfolio, but look, if tech starts to come under a little bit of pressure, is it going to really affect that industry? It'll affect the NASDAQ, but I think the broader market feels really good to me.
Do you think Netflix tonight is a canary for anything, or is it so specific that even if they miss guidance?
Yeah, I mean, it is very specific. I mean, so when they missed Q2 that badly 3 months ago, stock was essentially dead money. You could have shorted stock at 3.25, and it's been one heck of a trade since then. Now, my problem with Netflix, a lot of the bulls are kind of hopeful positioning's the most favorable it's been in quite some time. Longs have been trimming. Shorts kind of is near a 12-month high. I think a $6 billion notional value from the short base. Again, if we see a squeeze, I'd still see the multiple cap to the upside in Netflix, simply because there's no pricing power left in the model, and you have real competition coming. So I think investors, especially in the tech community, they want to see Disney Plus numbers for a couple quarters to get a sense of where Netflix stands. It's not going away. I just think the growth's going to moderate. But again,
churn.
Exactly.
But if they miss, then people will use it as an opportunity. Once again, they'll jump in. They're overpriced. They'll sell them off. They'll do all that stuff. And then they'll stop and scratch their head and say, what are we doing, right? It's a miss in Netflix.
Right. Yeah. So, Kenny, if the heat comes off Adobe and Workday and the likes of those, even Netflix, can we count on the Disneys and Walmarts to really power us higher? Because that's not what you would have thought a couple years ago.
No, it's not. But, listen, I tend to be a more conservative player. And so if you're somebody who's worried going into 2020 and the election cycle, and you're kind of worried about, this big bad boogeyman of a recession that's going to come at some point, and you're somebody that still wants to have stock exposure, then I would imagine you would flock into value names. Whether or not you say Disney's a value stock, it is a big Americana company. It's got a nice dividend. It's a healthy name. It's a name that everybody knows. It's a name that provides some stability and security. And so I wouldn't be surprised to see kind of that rotation into those big Americana names as you move into a period where you might be a little bit anxious, cautious.
Yeah, well, we'll see. Even Iger's talked about the integration issues they're going to have with the Fox assets and so forth. Not to mention, as you said, they want to see some proof of performance on Disney Plus. Maybe the bigger story tonight, who knows, could be CSX, right? We already know what rail traffic's been like. Cass Freight says GDP's going negative by the end of the year.
Right.
If they say something marginally negative, people will put some investment in that.
Well, they will put some investment in that, and if we really think GDP is going to go marginally negative, then that speaks very specific, right? I'm not necessarily sure I could see the slowdown. We've been talking about that. It's certainly coming. No one should be surprised, but I'm not necessarily sure that one report in CSX. Now, if they all start with the same story and they all start missing and lowering guidance and talking negative, that'll be a different story. But the jury's still out.
Yeah, banks have not done that. That's for sure, right?
Banks have absolutely not done that.